As per a latest study by CBRE, they have cited the fact that real estate investments have surged in the September quarter, and investment activity for 2025 is also expected to close on a strong note. I'm, of course, joined by Abhinav Joshi, Head of Research India, Middle East, and North Africa at CBRE, and Senior Business Economist Sanchita Mukherji to decode the highlights of this report. Thank you both for your time. Abhinav, for those wondering, look, how was this study conducted? Because the study by CBRE states that India's real estate sector has experienced a notable surge in investment activity in the third quarter of 2025, that is from July to September. Now, the study suggests that this surge is primarily driven by capital deployment in built up office and retail assets, sustained momentum in land and development site acquisitions, also. And of course, it also highlights how Mumbai, followed by Pune and Bengaluru, accounted for 66% investment flows. So, for all those watching, if you could decode the highlights of this report and also tell them how was this study then conducted.
Sure. Thank you for inviting me on your platform. This largely focuses on large investments coming from developers, but also coming from private equity funds, sovereign wealth funds, foreign investors, a lot of domestic funds who might be funded by banks or NBFCs or, alternate investment funds as well. So we track all the transactions that have been concluded in that particular period across the country, especially for the top 7 cities. This covers multiple sectors. This would include land or development, would include income generating assets like offices, retail, industrial parks, warehouses, data centers, such as the scale of CBRE that, we have those touch points and the networks that we get access to these transactions, and then we vet them with our experts. In the July to September period, we saw about 50%, almost 50% growth in investments compared to same period last year. And that was noteworthy because we've been talking about, normalization of growth. We've been talking about tempering of sentiments, but it doesn't look like that investors are tempering their sentiments at all as far as real estate opportunities are concerned. We're seeing a lot of acquisition of land for prospective residential development. Now, everyone's been talking about that, residential might be going through a slowdown. But fact of the matter is developers know what's really happening, how the demand momentum is evolving, and they're positioning supply accordingly. And that's happening not just in the tier 1 cities, but also tier 2 cities. At the same time, you have a lot of private equity funds who are finding opportunities. If there are earlier investors like PE funds or REITs who are exiting some of the assets, then there are new investors who are coming in because they just find the entire IT park and the business park environment in India, the entire ecosystem very attractive. Industrial and logistics also, because e-commerce is growing so fast, you have direct-to-consumer brands which are growing so fast, you have quick commerce that's growing so fast. So obviously requirement for warehousing, modern warehousing space is also growing. That alongside industrial parks has also seen investments. Then a handful of investments in retail malls because it's a small sector. So investors have to be careful in the kind of asset they're deploying capital in. But we're also seeing a lot of development in data centers, right? So all of that put together, we've seen around $3.5 to $4 billion deployed in just 3 months, which is almost 50% up compared to last year.
Right, almost 50% up compared to last year. Sanchita, your thoughts on the study, the highlights that it reflects and that Abhinav just took us through. Also, the transition that this reflects for the real estate sector at large, Sanchita, and what this means for investors and for consumers then.
Thank you so much for having me on your show, Sakshi. Always a pleasure to be here. And as rightfully pointed out by Abhinav, the entire journey of real estate has been in India has been from a very unorganized, localized point to a point of institutionalization and a more structured asset class. So the way we see the journey of real estate, it has been about liberalization, boom, consolidation, and maturity, right? So within this, for example, if when I'm talking about liberalization, boom, consolidation, and maturity, how do I explain real estate as an asset class given the various sub asset classes that it encompasses? What he rightfully mentioned, there is industrial parks, there's REITs now, which is an investment vehicle, there are data centers, there are residential, there's commercial real estate. So if one were to see the journey of each of these sub-segments, which we broadly categorized as real estate, one could have a look, say, for example, commercial real estate came largely into focus in the mid 90s, when there was an IT boom explosion in India as a service industry. And that's when the entire focus on commercial real estate came on the anvil. Residential came on the anvil in the 2000s, early 2000s, because of easy financing and economic development. But then it stagnated a lot up to 2013 because of regulatory changes and various other issues and oversupply, of course. Then, if one were to talk about retail, right? Retail again, early 2000s, from in tier one cities, there was a huge focus when malls started opening up. However, from 2010 onwards, there was an e-commerce boom in India, which again forced a lot of malls to shut down. So then the entire focus of investors within the retail real estate community was to now focus on quality assets and multi-use assets, right? So various subclasses. Currently, the way we see things unfolding in India, of course, this is not an investment advice. This is a general discussion on real estate as an asset class. Commercial real estate, definitely, it's stabilized. It's yielding high yield as an asset class because there's a lot of focus on GCCs and the outsourcing that India is capable of as a destination country. GCCs definitely are increasing the yields on commercial real estate as an asset class. Residential is more end user driven. So while we possibly might see a slowdown in the mid market because of all the H1B visa curbs and offtake and a question mark on whether the mid segment will perform or not. Luxury, again, it's end user driven. It's also driven by a lot of NRIs who are returning and investing into luxury. Logistics, warehousing is doing phenomenally well because of the entire focus on government initiatives and e-commerce in the country, which is happening. And there is a lot of focus also on alternative real estate, which is data centers.
Right. Now, both of you have, of course, mentioned, the key areas really, and the key, areas where this could see a significant surge going forward. So, Abhinav, if I were to ask you which subsector really will witness the maximum investment activity or the maximum surge going forward, what would you tell our viewers? If you could please unmute yourself.
Yeah, I'm so sorry. As business parks and IT parks, as my counterpart just pointed out, have gone through significant growth momentum, and as GCCs plan more expansion in India, see, I mean, it's very easy to talk about trying to curb outsourcing. You would be practically kicking in the underbelly of the entire American services industry, and they derive significant discounts, and those discounts and that value actually add up to, or they contribute in whatever expansion or R&D or M&As that they do. So the American economy, I don't think so, can really survive without outsourcing. And GCCs is the most evolved form of outsourcing, where 70% of the GCCs who are coming to India are actually setting up their R&D centers, which basically means that also includes AI. So India as a market is also being used, which has a large talent base of AI. So that really shows that the entire momentum is not just strong, it's matured. The landscape has matured. So my gut feel is, given the size of the commercial office segment, it will continue to offer significant opportunities, especially in tier one cities. But I also see, if you see the recent development where Google has invested in Vizag for setting up its AI base, but also the data center base, I would also put my bets on the data center sector. It's almost trying to come out of the alternate segments bracket and trying to come into the core segment. So I would not be surprised if another 2 to 4 years, data centers actually end up becoming one of the core segments for investments or for activity for the developer or the investor class in India, besides office, retail, residential, which have always been there, and INL that came into the last 10 years. These two segments I'm positive about. Retail is very niche. You have a lot of direct consumer brands, which are basically retail startups who are now moving into offline retail because they have an omni-channel strategy. So that is sort of generating additional demand. That's almost like 20% of the leasing is coming from such brands, which is phenomenal. But retail, again, it's a very small investment class. So you will continue to see some niche investment flows in retail. Industrial and logistics, while all the ingredients are there, the problem that the sector is facing, that the land or the input cost has grown significantly in the last 5 years. So investors are a little cautious, but of course, if they're seeing the right opportunities, they would definitely deploy capital. So my take would be offices, data centers, and third, I would say mixed use developments.
All
Mixed
right.
use are gaining a lot of popularity. So you'll have residential plus hotel plus retail, etc. So I think a mix of all of that. Yeah.
Right. So we've gone through what this means for investments, for investors, even for the segments at large. But Sanchita, we've not really addressed what this means for consumers then. So if I were to ask you, what does all of this, this shift that Abhinav was just explaining, signal for consumers? We're also living in times where other reports are suggesting that, look, housing prices are significantly jumping, rentals are driving also quite high, premium homes are driving the momentum, and also workspace flexibility is really driving demand. So going forward, what does this mean for consumers then?
So again, it's how we define who the consumer is. Say, for example, REITs, SIFs, these are investment vehicles, domestic institutional funds, private equity. For them, investing into commercial real estate is a part of their portfolio. If you're talking about the end user who is looking at housing, a lot of professionals prefer in today's date perhaps to rent it out than go for an outright buy. Again, it all depends on the end user demand, whether they would actually live in that house or they are looking to buy a house to add on to their investment portfolio. It all depends on that. And a lot of them prefer to rent it out in a situation in which they feel that the prices might stagnate now for the next 5, 10 years, and they would much rather rent. That's why a lot of the rental yields are going up if one were to have a look at the end user sentiment, especially in housing. So that's to talk about that end user bit, the consumer bit.
Right. Thank you so much, both of you, for decoding this report and the broad highlights for investors and for consumers. And of course, for all those wondering, well, real estate investments are surging as per this latest study by CBRE. And of course, going forward also, they remain optimistic on investment activity and expect, the investment activity for 2025 to close on a strong note. So we will continue to track that and more going forward. Thank you.
Thank you.
Thank you.